Frank, thanks a lot. Hello, everyone. Good to see you all. Today we're with a very exciting topic, the emergence of a new asset class. And even more exciting, it's operated on a very innovative technology. So more than happy to have my fellow speaker, Reynaert, who is CTO of the ARTEX Securities Exchange. So floor is yours.
Thank you, Mark. So I'll be presenting what is ARTEX, how you can trade shares of iconic masterpieces with it, and how we managed to build a cloud-based multilateral trading facility integrated with the traditional market infrastructure. It's working. So what is ARTEX? ARTEX is the first MiFID-compliant, EEA-regulated trading venue for iconic masterpieces. It is so every artwork that is listed on our MTF is held on a dedicated special purpose vehicle issuing common shares, transferable shares, under Luxembourg ISIN. So in essence, ARTEX is just like any other traditional exchange in Europe. So initially, the shares are issued at the euro equivalent of $100. In the case of our first listing, the Francis Bacon, it was 92.2. And we want to offer a new way to invest into art that adds value every step of the way to the collectors, to the trading members and participants, to the institutions supporting the initial transactions, such as placement agent, book runners, or underwriters. But more importantly, we want to give access and the opportunity to everybody to invest into blue chip, iconic masterpieces in a safe, transparent, and liquid fashion, effectively democratizing art. So, investing in art has been a way for the wealthiest to store and preserve value throughout history for centuries. If you take the art price 100, it has a consistent compound annual growth rate of over 9% with very little correlation to other assets. So it makes a strong case within a portfolio to hold art. So there's also the negative correlation, so it makes it diversifying as well. And as a result of this, a lot of the most stunning pieces are held in a living room, stored in a dark room at the Freeport of Geneva, or in some vault, depriving the world of their beauty. At ARTEX, we wanted to both free those artworks and also give the opportunity to everybody to benefit from those financial properties. So while we all know that it's an opaque and inefficient market, it is also much bigger than one tends to think. If you take ARTEX's initial scope of over 10 million artworks, it's this small dot, the 21 billion. There is a problem with the scale. And but if you remove the entry barrier on the price and accessibility, then you tap into a market that is above $3 trillion. So it's much bigger. Now, every year on the art market, the transactions are representing 3%, less than 3% actually. And for gold, that went through the similar phase, it grew up to a turnover of above 100% yearly. So it's not unreasonable to think that ARTEX could grow much bigger than that and even steal from gold. Because art can be compared with gold in the way that there's a physical underlying asset supporting the value. Now, in the case of art, not only it is rare, but also timeless and unique. And the Francis Bacon that we just listed happened once in the history of mankind and will never be painted again. So a quick view of in the historical sense on the masterpiece index that has been built specifically on ARTEX scope by Professor Dr. Roman Kreusel, that shows a strong anti-correlation pattern throughout decades. And if you take, we're most interested when art is going up, when all the other assets are going down. It happens in 2012, 14, 17, 20, 21. So it makes a strong case, again, to hold art as an asset within the portfolio. Over to you, Mark.
Thank you very much. Thank you. Yeah, thanks a lot. Okay, so yes, investing in art is not something new. There is good economic rationale, as Alex rightly said. It generates return, and also it is not correlated with the traditional asset classes. What is new with ARTEX is the change of paradigm in the market model. So if you take the left, paintings are physical, non-bankable assets. The market is by nature illiquid, opaque. There is one price tags every couple of years or decades. It's not regulated, and it's only available to a very exclusive circle of investors. And last but not least, it's related with very high transaction costs. Bear in mind, auction houses do usually charge service fees of about 15 to 20% of the value of the underlying. So this is huge. Take the example, for example, of a family office manager willing to grant a loan collateralized with a painting. He faces a huge challenge. He has no big idea about the true value of the painting. He has no clue at all about the authentication of the painting. So presumably he will have to hire an expert, meaning it will be expensive, time-consuming, manual, and non-reproducible process. When we move towards the right part, so the new paradigm change in the market model, we see we are in a known territory. We see an ISIN, a currency code, a MIC code, and the idea is really to produce a fully bankable asset. So the traditional securitization process of the underlying, the physical painting, becomes a financial instrument, in fact, a plain vanilla equity instrument. It is liquid because on the ARTEX market, there are market makers posting two-way quotes. It is transparent. There is real-time market data available. It is regulated. The FMA, the regulator in Liechtenstein, and bear in mind, Liechtenstein is part of the EEA, so they have to comply with all the rules of financial markets in Europe, including MiFID, MiFIR. It also recognized by the Swiss regulator FINMA, meaning that banks and brokers based in Switzerland can also easily access the ARTEX Securities Exchange. And last but not least, low transaction costs. It is the cost of an equity trade. And it is fully bankable asset. It means any back office of banks can process ARTEX transaction and asset servicing in a fully STP automated way. Next, please. Okay, so what's the role of SIX in the entire value chain of ARTEX? So we are in the less sexy part than logically painting origination. We are on the financial plumbing part in order to make these securities a fully bankable asset. SIX is a well-known financial market infrastructure operator, an FMI. We are operating 6 Swiss exchange and 6 digital exchange in Switzerland, BMA in Spain, also on the post-trading. So the idea is really to leverage the existing 6 services and make the 6 services available for ARTEX financial products. More specifically, we put our risk management tool, our clearinghouse, XClear, to the disposal of ARTEX, meaning this is the tool for offsetting the counterparty risk on this market. Mentioned MiFID, so the obligation to have real-time market data. This is also what we are doing. We have plugged our vendor-neutral MDDX data feed to the ARTEX trading engine, and all of the leading data vendors and ISV in the world are already connected to our MDDX feed. This means, in turn, there is almost no technical connectivity and integration cost related to that. We also have a plan to offer index and benchmarking services in the future with our colleagues from SIX Index AG. They've got a solid reference and offering already in the index and benchmarking product space. So these are currently what we have in place and what we have as a plan in the midterm future as additional SIX services. Next, please. Okay, this feed, which looks a bit technocratic, but I think what is important to you, this piece of good news, is the ARTEX market data, the real-time market data. It is absolutely free of charge. There is no redistribution fee, no end-user fee, no reporting obligation, and this very generous fee holiday will last for the whole 2024 and presumably also part of 2025. Next, please. And yes, there are already leading vendors who are supporting and redisseminating the real-time market data of ARTEX. You have SIX financial information on the on the SIX ID terminal, the SIX web API, and if you have access via the BC code 5517, you will access immediately the ARTEX data on the various SIX financial information real-time services. Next, please. Same display and feed product from Refinitiv. Next, please. And same for Bloomberg feed and terminal products. So all these three have already the ARTEX market data package available on their various services. So, conclusion, Michael. Oh, yes, very important. No. Okay, what you can see with this Francis Bacon share, the trading started on March the 8th. You can see the issue price that Alex mentioned, 92.2, and since then there is a decent price evolution, no erratic price movement, and some decent volume for the, I would say, a mid-cap of the art market, and a decent trading activity throughout this 2 months period since the launch of ARTEX. And Alex will certainly mention what is in the pipeline and the future listings. And I will terminate my part with a call for action. You've seen generous fee holiday. So do pick up your phone, contact your vendor, and request immediate access to this very exciting real-time data of ARTEX in the ARTEX data package. By the way, most data vendors are there downstairs in the exhibition hall, so feel free. Rush there and request your free access to the ARTEX market data. Back to you.
Okay, thank you very much. Thank you, Mark. So, as we're in the emerging technology workstream, a bit of the history of ARTEX and how it was built. So we had to build something that complies with the need of the regulator, meeting the industry standards, with still a startup budget and a small team. So going for the cloud was a no-brainer for us. We can leverage experts on the ground to build everything for us, such as hardware, network, HVAC, anything, electrical redundancy, and also on the service level, you get access to all sorts of experts to solve problems with you. So on this front, we are building on the shoulders of giants. We were able to experiment freely, get things wrong, and the goal was to also leverage all the managed services that gives an organic resiliency, scalability, and availability that is requested by the industry standards So not to bother you with the technicalities, but on the horizontal scaling, we use Elastic Kubernetes Service. Basically, it orchestrates computing nodes that will, if one dies, another one picks up the workload. It's stateless, so it can carry on seamlessly this way, and you can do stuff like putting one security on one instance of the matching engine. Should a security experience a surge, you would prevent contagion this way. On the vertical scaling for data at rest, we have a relational database service with features like multiple availability zone and always on that will replicate real time across several data centers, our data and market data. That way, if you lose 1, 2, even 3 data centers, it shouldn't be noticeable. On the data in transit, we use NATS. It's a distributed delivery system that will replay messages until they are processed and acknowledged. And on the cache data, we use a managed service based on Redis that is called Elasticache. Now, with the cloud, you can replicate an infrastructure as code to support that. You can build similar environments segregated on virtual private clouds. So we have dev, test, prod, and we can really have a strong change management and an agile continuous integration and continuous deployment. On the security aspects, you can manage also security on a very harmonized and fine-grained way with security roles and status specific to instances. So we completely leverage that. And on the cost point of view, then everything is clearly tagged and you can manage and grow in a controlled manner, have better cost predictability. Now, the thing was to reconcile the cloud-based model with the traditional infrastructure. And it was all about building interfaces and connectivity. So we started by providing a fixed interface for orders and quotes, because that's what the industry standard require. And then we partnered with Broadridge to provide a bridge that would normalize the flow and provide a fixed version abstraction. So the good thing about their bridge is hosted on the Frankfurt FR2 data center that is usually requested by market makers to do some collocation connectivity. On the transaction interface, we built a fixed real-time interface to stream the trades. On the market data to stream to XFeed, we also built a fixed interface. We also went to a joint task force with AWS, XFeed, and ARTEX to build list line, so from the cloud to the underground, and make it happen to the industry standards. We have to say that SIX was a strong enabler and support in building those interfaces. It wasn't easy. And on the more compliance side, we have the approved reporting mechanism that is an interface with LSEG's regulatory reporting, formerly UnaVista, and market surveillance with KX. Now, we needed to prepare for launch and properly test all of our infrastructure and systems to make sure that we start flawlessly. So on the non-functional side, the difficult part was to reconcile the DRP concepts that are organic on the cloud with what would be requested by SIX or all the other partners and participants. Because in the cloud, a disaster goes much further into the distribution tail of scary events, because you can lose a couple of market or a couple of data centers and you won't see it. So the issue is documenting it because it's organic. So in a way, it's done for you, but you are blind to how it's implemented. And AWS provides something called fault injection service, FIS, that allows to inject a lot of failures. It's based on chaos engineering, and you can test that your infrastructure is completely resilient. On the functional level, we partnered with Exchange Hackers, ExactPro, so they're quality assurance experts that are very seasoned with most of the worldwide exchanges. They tested our trading manual, our fixed interface, the fixed specifications, test under load, and all sorts of tests on the market phases and everything around our market infrastructure. So this is the market infrastructure that supported our first listing. Thanks to the cloud aspect, we can grow really in a controlled manner. It's been running for a couple of months, absolutely no incident. It's important to note that the Francis Bacon listing is the biggest art transaction this year. So it clearly shows that we're providing a model that allows people to keep invest in art in a context where cash is very costly and difficult to access. Now, to finish on the pipeline, because the Francis Bacon was the first one of many, and we currently have a pipeline of over $1 billion ready to go. We still are on the teething side of streamlining the process, but the goal is to list every month a new artwork. And amongst the names that we have currently, there is a Richter, a Monet, a Van Gogh, a Picasso. Where am I missing? Klimt. Yeah, Klimt. So yeah, it's absolutely. Those are big names, and obviously, as Mark mentioned, we're planning to release indices and hopefully subsequent ETFs. And yeah, I think we can celebrate the fact that for the first time in history, you get continuous data on an artwork, and soon on the art market, at least on the blue chip scope. So thank you, everybody. If you have any questions, thank you, Mark.
Shall I?
Thank you.
Yes, many thanks for this marvelous presentation. I think it's really very interesting, a lot of fantasy in it. What kind of face value or value should a painting represent to be considered as a future SPV? Do we start somewhere at, well, not the trading of the share at 100 euros or US dollars? I mean, if I've got a painting at home which has, 25,000 grand, well, I wish.
So a lot of people are offering to build up our sourcing pipeline. For now, it starts at 30 million. It's the minimum price to be eligible. And then there is in the context of art, a short process, but it's still 6 weeks of due diligence to guarantee that it's authentic, it has proper provenance, and we go through scientific analysis, independent valuation from 3 advisors, and yeah, we do everything to make sure we're not listing something that is in the end just like the Salvator Mundi or some infamous case in the art market.
So, one question?
I think I can speak up.
Okay.
Well, this asset class has a lot of peculiarities. I mean, how does somebody consider to bring his art in that size to your market and not to one of the largest auction houses who have established even opaque but very functional pricing strategies? So do you offer not to free float everything but just partial? So that is an attractive thing, and then we can later decide to sell it to somebody else and pay out the kind of timing shareholders who've just been doing a term investment instead of a real investment. Second, holding an asset like this is something that has a negative carry by definition. You need to insure that, for instance. So trading sideways means trading downwards. How do you cope with that? After 5 months, that's not an issue, I understand. But systematically, you should have that in the portfolio effect. So how do you care with negative carries?
Okay, so there are a lot of questions in your question.
Final governance over the assets. So who decides when it goes to an exhibition or not, and when it goes to the final market to be sold into the next vault again after being public for a while?
Yeah, so on the attractivity of our model, obviously you've seen some of the sales that fell through because the buyer couldn't find the cash. So finding $100 is much easier than finding 100 million. So on that front, it's easier. On the timing, usually it takes 6 months because you have sales around May and then sales around the end of the year. And it's only those two sort of windows where you can go for those sort of big artworks. So on that front as well, we offer a much bigger, a much more attractive way to list. Now on the fees, it's much cheaper to go with us because it's not a 20% fee. I know that they, recently reviewed their fee scheme, but it's still not as attractive as what we offer. On the negative carry aspect, so it's an important point because a dedicated entity of ARTEX Services is taking all the logistic costs, insurance costs, traveling costs on behalf of the SPV. The SPV isn't funding anything related to the artwork, right? It's just based on the asset. Everything that comes with the conditioning, storing, traveling, insurance, nothing is borne by the investor. And on the governance,
that's not the full answer. Somebody needs to pay for it, right?
Yeah. So
even if it's not the SPV, so you need to even earn much more than paying that.
So the MTF earns trading fees, market data fees. Those fees, on top of the listing fees, it's a package that will fund the life of the artwork. Now you still have museums wanting to exhibit the artwork that will pay for insurance or travel. Then it's on the per case basis. But the thing is, the SPV doesn't pay for anything related to the artwork. And on the governance, so the shares that we're issuing don't have a voting right. It's B shares. The A shares are held by a stichting, so foundations in Netherlands that are ruling over all the SPVs, but the directors there are independent from ARTEX. I hope that I unwrapped the...
And maybe 2 words about the free float level that...
that was actually a really good question. So the Francis Bacon listed has only listed 75% of the floating. The remaining 25% are still held by the former owner. And he's allowed to liquidate his position at given time frames, providing that there are some sort of levels that are reached upwards. That way he doesn't flood the market. Yeah, local period.
Does the SPV or the share itself earn any income?
Currently, no. And the fact that if it does, it will be used to fund the life. There is some sort of, it's not a retro fee, but if it exceeds 5 years of working capital for this aspect of the logistics, then we will consider having dividends. Actually, you can't have a share without any sort of potential dividend. But we haven't really entertained that, but you could, you own some of the copyrights and the right to reproduce. So with that, you can do some merchandising. That's not the goal currently, but you can, find a model that generates fees out of the artwork. But the goal is to have as many people as possible seeing the artwork at an exhibition close to where they live. That's the goal.
And then you earn money that way, but that's not paid out dividend. That's not.
No, we lend it for free to the museums because museums are struggling. They can't rotate their exhibitions because they're very rich in asset, absolutely poor in cash. The COVID killed them even more. So on that front, we don't want to monetize culture.
Done?
Thank you very much.
Thank you very
for the
much.
Interesting presentation.
Thank
Thank you.
Enjoy your lunch break.
Thank you.